How's it going, everybody? It's Stas here. So the markets had a pretty solid day today. The S&P went up 0.2%, the Dow went up 0.6%, the Nasdaq 100 went down a bit, down 0.2%, but it's okay because the Russell went up 0.5%. So today we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, go down below, get your $50 from M1 Finance, and check out my Patreon. If you guys want all my buys, sells, call outs, all in real time, and more access to me, plus a morning update video every day, that's on Patreon, link down below. And with that being said, let's get right into the video. So today we had the CPI numbers. We got the CPI numbers in the morning at 8:30 a.m. on the East Coast. And if you guys want my thoughts on these numbers and a full breakdown of the numbers, check out my video from earlier today. It was about a 10-11 minute video going over all of these numbers, my thoughts on them, and how the market reacted. Well, I guess we'll talk about how the market reacted in this video as well. But if you want the full breakdown, check out the video from earlier today. And let's take a look now at what SPY did. Lo and behold, SPY hit another all-time high at $443.94, and that was actually hit in the pre-market. You guys can see here we saw a big spike after the CPI number release. We hit that all-time high. The market opened. We were choppy a bit. Then we saw a bit of a sell-off at 11 a.m. here on the East Coast. That lasted till about noon, and then we got a rip from noon till 4 p.m. Pretty much the last 4 hours, we got a nice rally from the bulls, a slow and steady rally from the bulls in the last 4 hours. So by the looks of it, guys, it's pretty much obvious at this point. The bulls are in charge. We're above all the moving averages on the hourly chart. We're trading above 442, which has been a big support that, well, it was a resistance. Now it's support. So the fact that we held 442 pre-market, we rallied off of it, hit an all-time high. These are very good signs for the bulls, right? And until we break under the moving averages, which again, we're not under the moving averages now, we're above them. Until we break under, the bulls are going to remain in charge. So not much to say. I mean, other than the CPI numbers were the CPI number was less than expected in the different categories that we broke down in the video earlier today. We covered how a lot of these categories, month over month, the inflation dropped. So that is why the markets saw a spike today. And when it comes to QQQ, which tracks the Nasdaq 100, this went down a bit, down 0.2%. We're trading under the moving averages on the hourly chart. We're actually seeing a death cross about to form potentially, which means the 50 SMA is going to cross under the 180 SMA. Now, will this happen? I don't know. It's too early to tell. And by the looks of it, we are fighting to hold a higher low at about 365. So who knows? Maybe we do bounce off of this, retake the moving averages, and start pushing towards 369. But it's kind of too early to tell. We need to see what happens tomorrow, on Thursday, and on Friday. That'll give us a better idea. Because look, if we end up dumping under 365 tomorrow, end of this week, we start going low 360s. That's not going to be good for the bulls. But on the flip side, we retake the moving averages, start pushing up 368, 369. That is going to be very good for the bulls. So that's kind of what I'm looking at in a nutshell when it comes to the technicals on SPY and QQQ. And again, I can't say this enough. Check out my video from earlier, of course, after this video, to see my full breakdown on the CPI data, my thoughts and everything when it comes to that. And now, and by the way, if you're all enjoying this video, make sure to smash that like button and subscribe. That really helps me out. Now, let's talk about some stocks, all of which, well, two of which report earnings tomorrow, and the other ones reported earnings today. And I decided to do something fun for this video. Maybe it's not fun for you, but it makes it a little bit more fun for me. I didn't look at these earnings prior to me filming this video, so you're going to get a live reaction on the price action for all of these stocks and the earnings report for that matter, for these different stocks. So stock number one is NIO, ticker symbol NIO. Let's see, did they not even report yet? That'd be a bummer. No, they didn't. They report tonight, 8 p.m. Central Time. So maybe that's in an hour and a half from now. So, yeah, they didn't report earnings. Crap, I thought they reported. Well, there you go. The live reaction. That is not scripted, guys. So we'll see what NIO reports later tonight. Maybe I'll make a video on them tomorrow. That might be a good idea. But overall, at this point in time, we can break the technicals, and they haven't really changed much since the last time we covered this stock. You know, we're still making higher lows and lower highs at the same time. We've dug ourselves into this wedge, and we're trading under the moving averages. Now we're actually moving down a little bit after market hours, and we did have a red day overall today, down a quarter on the day, down about 0.6%. So I want to see what side or what direction we pick. Do we end up breaking out of the resistance of the wedge? We take out the moving averages and start moving up towards 47.50, hence why I have my alert there. Or do we end up dumping towards the bottom of this wedge, the support of the wedge, at about 41.50, which in turn could end up leading to another drop. Let's say if we break the support of the wedge and we start going to test the lows from the end of July, that might not be the best for the bulls, obviously, and that could come with an earnings report that is subpar. So we're going to be watching out for that. We'll probably cover it. I mean, we will cover it in tomorrow's videos if I make a NIO video or if I cover it later in the day. I'm definitely going to break it down, but we did get some delivery numbers recently. I'm not sure where they are here. Bear with me. Here we go. They reported delivery numbers for July of about 7,900 vehicles. That increased by 124% year over year. So that is strong. I mean, they're still growing at 100% plus clips, which is always nice to see. And again, we'll cover those earnings tomorrow when they do come out. And the second stock here that I'm looking at is eBay, ticker symbol EBAY. They also just reported. Let's see what they did here, guys. Live reaction. EPS beat. Okay, that's good. EPS came in at 99 cents versus 95 cents, so nice beat there. But, oh, man, the revenue missed. That's not good. Revenue $2.7 billion versus $3 billion estimated, and that's a pretty big miss there, guys. Wow, that's about $300 million of a miss. Ooh, that's not that great. Let's see what they have some guidance here. Q3, they see Q3 EPS of 86 to 90 cents versus the 90 cents estimated, so that's a bit under the estimate. And they see sales of 2.42 to about 2.47 billion versus the almost 9 billion estimated. So they missed revenue. They beat EPS, which is good, but their next quarter guidance is lower in terms of the estimate for both EPS and revenue. So that is really not good at all. But I guess one good thing here is it says annual active sellers grew by 5% for a total of 19 million global active sellers. Okay, that's not bad, but still, that revenue miss, the guidance miss, that is not good whatsoever. I'm surprised eBay is not down more. It's only down less than $1 after hours. Maybe it's baked this in because the stock has been down about 10% the past couple of days. So we're going to be monitoring eBay. I want to see what it does here at about $65. $65 was resistance in February into March a little bit, into June, May as well. So we're going to see, do buyers step in here despite the bad earnings report, bad guidance, or does this thing ultimately fall under 65? If it falls under 65, that is not going to be a good sign whatsoever. But who knows? Maybe the stock goes up despite the earnings being crappy, guidance being crappy. That could happen as well. And maybe we end up filling the gap towards $70, $71. And wait a second. Look at that candle. Holy crap, guys. This went to 72 once they reported, dropped all the way down to 65. Now it's coasting at about 67. So what the heck prompted this to go to $72 after that earnings report? That does not make sense to me. But hey, when has the stock market made complete sense ever? I mean, it doesn't, That's the crazy thing. You notice some stocks, they beat earnings, they beat revenue, great guidance, and somehow the stock goes down. And then you notice the opposite happens, and the stock goes up. It's weird. You never know what the heck's going to happen in the markets. But eBay, that is what they did. Open Door also reported, and whoa, this one's up $3 on a $14 stock. That is a big move. Wow, guys. This one's up about 20% after hours. So let's dig in and see what they did. Wow, that's impressive. And you guys probably can't see this, but I'll read it to you. So just listen in. Q2 EPS came in at negative 24 cents versus negative 34 cents estimated. So they beat EPS, and sales came in at a beat as well. 1.19 billion revenue versus 1.06 billion estimate. And here, let's see, do they show us the guidance? Well, it says Open Door Technologies shares are trading higher after the company reported better than expected Q2 EPS and sales results. And I'm not seeing anything about guidance quite yet, but hey, they beat EPS, beat revenue, and the stock is completely on fire. Oh my goodness, completely on fire. So by the looks of it, technically speaking here, we're breaking out of the 50 and the 180 SMAs on the 4-hour chart. We're breaking out of the resistance of the descending triangle as well, which is good. And now we're testing the resistance point from the beginning of June throughout the beginning of July, right around $18, which was a sticking point for some time. So if Open Door could get out of $18, this could be back to the 20s in no time. I mean, the next big spot of resistance I'm seeing after 18 is about $20, followed by right around 22 to about $22.50. So yeah, killer report from the brief glance here from Open Door. Kudos to all the shareholders out there. I've mentioned before, I own a little Open Door, nothing crazy whatsoever, but I do own a small position in the 16s, I believe. Yeah, 16s is where I own it. So what a day for Open Door after hours, at least. I mean, throughout the day, it was down 2%. But again, after hours, it is now up 20%. So I'm digging that. That's awesome. Blink Charging is another one that reported. And let's see what this did. It's actually down a little bit. Down about, 70 cents. Nothing too crazy there. So the report was probably underwhelming. Let's see here. EPS misses by a wide margin. Wow. 32 cents in the red versus 16 cents in the red estimated, which is a big miss. And revenue came in. Oh, wow. Revenue came in at $4.4 million. What? Is that all they're making? I didn't realize how small of a company this was. Geez, $4.4 million versus the $2.4 million estimated. Hold up. Let me check my phone. How big is this company? They're only making $4 million a quarter. Geez, that's nothing. I thought they'd be making more than that on the top line, that is. So Blink Charging is, all right, that makes sense, I guess. It's a $1.5 billion company. So if they're only making $4 million a quarter times 4, guys, what is that, 16 mil a year? Geez, that is an expensive stock. I mean, the market cap's at $1.5 billion. They're only making $16 million. What is the price of sales on that? That is just unbelievable. Let me see if I can pull that up. Price of sales, it's got to be like 100 or something. 200. 200 price to sales. So as a long-term investment, I would not be touching Blink. There's no way unless it fell down. I mean, let's be honest. For this to be worth $1.5 billion, I mean, or for it to be making $4 million a quarter, the stock's price has to be like $10 for it to make sense, maybe even less than that. So it's extremely overvalued, no doubt. But as a trade, I would probably consider it if it broke out of the wedge here on the 4-hour chart, and maybe started moving above those moving averages. But other than that, I'm not touching it. And its competitor being ChargePoint, I've owned that stock in the past. I traded it, made some good money on it. This one has a market cap of $8 billion. And let's see what their price of sales is. It's got to be less than 200. I'd be shocked if it was over. Okay, there we go. More reasonable. 50 price of sales for ChargePoint, which then again, a 50 price of sales is a lot, but 50 compared to 200 for Blink, jeez, that is just unbelievable. So I wouldn't touch Blink, no doubt, as a long-term ChargePoint. I would consider it if the price of sales got a little bit lower. I mean, look, ChargePoint, there's a lot of growth, but that 50 price of sales is still pretty high. So if this were to get down into the 10s, maybe $11, $12, $13, $15, that would be a little bit more reasonable. But now, hey, these charging stocks, there's a lot of hype around them, no doubt about it, which is why they have these inflated valuations. So the next stock I'm looking at is Palantir, which reports tomorrow. Yet again, another one of these hype stocks, but it's come down a lot from 45 to 22, 23. So it's down 50% over the past couple of months. And we've covered this. You know, we see an inverse head and shoulder, left shoulder head, right shoulder. We've seen a lot of consolidation the past month at about 21, 22, right around that neckline. So the right shoulder is well in formation now, or it's starting to form, right? Now we just need to see the breakout for the right shoulder to complete, whether it gets to $28, $30, $35. It's yet to be seen, but we need the breakout. And with earnings coming out tomorrow, I think in the morning, yeah, they're coming out tomorrow morning, we must see whether that causes it to break out. And, you know, at that point, we could end up potentially trading it. So I'm going to put my alert at 2350 on Palantir, right above those moving averages. If that is able to break, look, we might be going high 20s, mid 20s at least with this one. And I like it. I'm not long Palantir. I don't own it as a long-term investment or as a swing trade right now, but I'd consider it if it were to break out. So we're keeping an eye on that one. Disney is another one I'm looking at. DIS, they report tomorrow. I am long on Disney. I own this as a long-term investment. And this has just been a funky stock. What we're going to be looking for is, as always, with every earnings report Disney comes out with, we're looking at in this case, we'll probably be looking at the park revenue as well, now that Disney's opened up, the parks that is, and we're going to be focusing on Disney Plus too. We need to see what these Disney Plus numbers are looking like, ESPN Plus, subscribers, all that good stuff, Hulu as well, and who knows, maybe this will prompt Disney to finally break out of this wedge or descending triangle, whatever you want to call it. I want to see if this makes it break out. So we'll see. Tomorrow after hours, Disney is reporting. And again, keep an eye on these park numbers. You know, we've seen the park opening up, you know, dropping. Well, actually, they did drop the mask mandate, I believe, but now it's reinstated over there in Florida and probably definitely in California as well. So we're going to be watching DIS and Tattooed Chef as well. Tattooed Chef, now that I'm thinking about it, reported earnings, or they do report tomorrow. And this is breaking out. It has been breaking out the past couple of days, although today it did take a bit of a haircut. But even with the 3% haircut today, it's still above the moving averages, above the wedge. So this is a pretty good sign, in my opinion, ahead of earnings. So we have to see, as these earnings come out tomorrow after hours, do we continue this breakout? Do we sell off, dump after earnings? That's kind of what I'm looking for and waiting for. And this is a longer-term position for me. I own this. I've been buying it. Well, not really recently, but I did buy it months ago in the 15s, the 20s even. I think my average is like 18, 19 on this one. So I'm long, I'm holding on, and I'm very excited to see what the earnings look like. So overall, guys, that is it. We covered about 8 stocks in this video. If you all enjoyed it, make sure to smash the like button, subscribe, drop a comment, and check out my Patreon. If you guys want all my real-time buys, sells, call-outs, and a morning update video every day, plus more access to me throughout the day. All of that's on Patreon, link down below, or you can go to StasserFest.com/Patreon. That's StasserFest.com/Patreon, and make sure to get your $50 from M1 Finance. Why not? It's free money. All you have to do is use my link, deposit $100, and we each get $50 to invest with. That is linked right down below. And you guys could also check out my video from earlier if you want to see my breakdown of the CPI data. I'll pop it up here. Check it out. Click that. I'll see you there. Or you can go to the channel and just go to the video before this. Click that. Check it out. I'll see you there. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out.